If you can't clearly explain your deal, you won't be able to raise the capital you need to build it. This is the exact document we give to investors when we're raising money for a real estate development project. It's called a business plan, or sometimes an investment deck. And in this video, we're going to walk you through it page by page. This is where we take everything we learned in the feasibility study steps 1 through 4 and put it into a plan. Whether you're pitching friends and family or seasoned investors, your business plan is how you share your vision and earn their trust. In this video, you will learn what experienced investors look for in a deal, how to clearly explain your project to potential partners, the must-have pages in a successful investment deck, and how to make your project stand out in a crowded market. If you're new here, welcome. I'm Ben, a real estate developer with 30 years of experience. I started flipping houses in 1998, learned every trade that I could, and eventually transitioned into ground-up development. These days, I'm building mid-rise projects, and at the time of this video's release, we're developing a 70-unit building. This video is part 5 in a 5-part series on how to run a full feasibility study. If you're jumping into the series here, I recommend that you go back to the first video, where we break down how to evaluate a development site and figure out if it's even worth pursuing. From there, I take you through each step of the feasibility study, ultimately ending up here, the investment deck. If you haven't already, go watch the other videos by clicking the link in the description below. If you already watched the first 4 videos, let's jump into step 5, the investment deck. So we call this a business plan, an investment deck. On our website, it's called an invest deck, right? Mm-hmm. It's kind of like just our branding. But when we're giving it to an investor, an investment deck is probably the right terminology. Mm-hmm. In our operating agreement, I think we refer to it as a business plan. But either way, we can call it, there's a few names for it. Have you heard any other name for this type of thing?
Sometimes offering memorandum. It's a little bit more like brokerish oriented because of how the document's being used.
Right.
But at least the way I think we use it and the purposes that it serves for us, it feels more like a business plan at its highest level, and then kind of investment deck secondary, because I see it as like a document that's meant to communicate to the different people that are involved in this project. In our case, we're usually using it when we're talking to our capital providers, whether it's a lender or an investor. It's also meant to be like a tool that essentially communicates everything that we've worked on, right, on a project from the beginning to the end, and kind of our thinking behind it. And it contains everything, all the analysis, all the research that we did in a relatively concise way. The document we're going to go over now is, 49 pages. So you could say that's long, but it's a big project that we may have worked on for a long period of time. And there's obviously a lot of things that are involved, and that project may have another 2-3 year time frame as well. So I would call that pretty concise relative to how grand these projects can be.
Mm-hmm. And this is an actual project that we're doing right now. So this is a real document, and if when you're looking at this, there's a lot of areas that are blacked out and redacted because it's sensitive information. Let's take a look.
So yeah, at a high level, there's always an executive summary, just a very concise 1-pager that explains what's the reason why the project is a good project. We always go over what we call a regional market overview. So it's meant to be somebody that maybe doesn't know the area at all. Everybody that we talk to, it could be a new lender or a new investor who doesn't really know the area at a high level. And so that's just meant to give you like a very, very quick summary of that section. Then we dive into the actual project itself. So this is a lot of the stuff that comes up as part of like our site analysis and our schematic design. So the building itself, the physical aspects. So we talk about it there. Then we also get into that real estate market analysis that we do. So there's all the comps and all the data that we have to research and figure out what does the supply pipeline look like. It's meant to incorporate all that information. And then we usually end it with a lot of the details around the actual legal structure of the project and then the financials itself. And so, we'll go through all these sections and show what it looks like in the format that we present it in this business plan.
For those who are putting this together, the table of contents here, this is what we're looking at right now. This is something you want to do last. You want to get through your entire business plan or investment deck first, create all the pages, and then create this table of contents. And this is something that you absolutely should have in a business plan.
So yeah, and then other things that we tend to put in are like a disclaimer, right? Because there's information in here. There's not, as much as we do our homework and do all the research, we're making predictions and assumptions. Can't predict the future with a guarantee, right? We do our best efforts at doing that. So this is just meant to be a disclaimer to kind of protect us as a sponsor who's going to manage this and the users of the information. This is relatively simple set of risk factors. Obviously, projects this big, the risks can be very large. There's more than just the 5 that we have listed here. These are like big ones that are typical for development projects. But at the end of the day, I still feel like, you have these things in your documents because you just want to set expectations. The first slide is just an executive summary. And usually the way I like to think of an executive summary, it's meant to be very concise overview and investment highlights of the project itself. So like, why is the project good? What are some things that, in the rest of the presentation, we're going to dive into the details. But like, what are some of the things that you can kind of extract from those detailed pages that can be summarized here if somebody's going to look at it? And, you're making a pitch, right? In a way with these business plans. This slide, I see it as being like, if you were only forced into like a 2-minute, what do they call it? A 2-minute elevator pitch, right? And you have to kind of make it very concise. What would you say?
Right. So it's just like a high level view of the project. And again, this is something that you want to create last. You want to create the entire business plan. And then once you have everything, then you create the executive summary. Because if you create this first and you think you know what the project is about, and then you start digging into all the details, then you're going to discover you have to go back and start tweaking the executive summary. So we always do this last.
That's right, yeah. And obviously, as we work on the business plan, we start to kind of get a feel for like, what are the things that are really good about the project? And this is partly what is meant to be conveyed on this. As I mentioned earlier, the next section is like a regional market overview. So in this particular project, we kind of go over things at a very high level, right? So we just talk about where is this project in relation to its surroundings, geographically, what state it's located in, where is it relative to other big landmarks. In our case, this project is, close to New York City, so that's kind of an obvious one.
Yeah.
And then we just, we'll have things like high level maps. We're not diving into like the specific neighborhood where the project is located. It's still at a high enough level where you're just trying to get some context, just get an idea of like neighborhoods that might be nearby at a very high level. And then usually when we're conveying this information to people who are not familiar, we'll try to give some context to all of this, right? Like, oh yeah, here's what this neighborhood is. How is it different from other neighborhoods? How far is it from other nearby areas, what makes it good. Just kind of give people an idea at a high level of that area, because in this case, it's a multifamily project, so people will live there. And so, what is there to do in that neighborhood? Is it safe? Things that are kind of high level. And here is there access to transit? What are the different modes of transportation that are available? Just kind of high level. It's just meant to touch on high level things without getting into the exact details, right? We're not giving bus schedules or train schedules or things in a document like this. And then we'll maybe like throw in some pictures of things to give somebody a flavor of what different areas of the neighborhood look like, or the city in which it's located, especially for somebody that's never actually seen it before or doesn't know it. And sometimes we even, if we're doing like a live presentation, you can sometimes jump into showing somebody satellite views, right? We've done that before.
Yeah. So what you're doing is you're making a case for why this project is viable in this particular area. Mm-hmm. So you want to show that the area is substantial. There's a lot of things to do. There's great ways to get around. One of the focal points is obviously New York City in this case. Everybody knows that there's a lot of jobs there. It's the financial capital of the world. So you just want to give that investor a good view of, where they are in the project.
Yeah, and we didn't put like, I have data, demographic data that's high level too. We touch on it a little bit later. We have a slide in here that talks about jobs. But some other things that I've seen, we just haven't done it in this one, but we've done that type of analysis in the back. Like, okay, what does population look like? How does this city compare to New York City and that population? What are the demographics? So that's kind of like the high level type of information that you could put in here. That's meant to give some context if somebody just doesn't know anything about that particular city. And then we start to get into the project itself. So we always have information around due diligence. There's obviously a lot that goes behind due diligence. We just kind of give broad strokes here in our presentations as to like, yes, we checked the survey. Yes, we checked the title. Yes, we checked environmental. We have our zoning entitlements approvals. If there's ever obviously issues or things around that could be disclosed here, but obviously we're getting into projects that are not supposed to have those issues, or those issues have been resolved, through our efforts. And then we'll go through that process of explaining what those are and that initial due diligence that is done, and just make sure that everyone who looks at this document is aware of what is that due diligence that has been done. And so, yeah, here we have it all listed, right? So I didn't mention geotech. That's another usual big one that we like to do earlier on, because it can have a big impact on cost of construction. Then we start to get into high-level things about the project itself and the building that we're building. So, right, this is a development of a multifamily building. We'd like to get into like, what are the features in the building? Common area features, right? Does it have certain amenities? Are there certain features that are within the apartments itself? We start to get into the description. Yeah, we're going to have washer dryers. We're going to have a rooftop deck. We're going to try to incorporate a gym. It's a 6-story building. It's got this many apartments. Here's what the unit mix looks like. Just some like really quick high-level stats on the building itself, like the physical aspects of the building. On here, it's redacted, but we'll start to talk about rents as well. And then we also get into, now we're getting more detail, right? Earlier on, we're just high level, right? We're just talking about the city at a very high level, where it's located, the regional area. Now we're getting specifically onto the street and the neighborhood where the project is located. And for us, we like to have visuals, right? Pictures are great. A picture speaks 1,000 words. So, this particular project is located, as you can see, in the New York City area. And it kind of gives somebody looking at this document a frame of reference as to where it sits and what the street looks like. What are some other buildings that are directly on the street that this project is located? Well, for us and the developments that we do, right, usually they're transit oriented. So we like to give some context as to where is this project in relation to any transit hubs. So in our case, we're very close to a train station, subway train station. We always like to show, like how far is it exactly? Like how quick is it for somebody who might live in the building? So this site's located only 8 minutes away. Just gives I feel like in general, it just gives people a really quick idea of like, where is this building? What does it look like without ever having to visit, right? And the great thing nowadays about the internet, all this stuff is easy to get.
Yeah,
right? Satellite views are great.
And in this particular slide, you're showing the walk from the site to the transit hub, which is a PATH train that goes to New York City.
That's right. And, we've done stuff like drone shots. Like we have drone shots for this site. Didn't use it in here, but, it just depends on, what type of information a person might have. Since satellite images are so easy to get nowadays, and a lot of those satellite images are pretty up to date, it's very easy to use that type of stuff in all of our materials. And it's just, it's actually one of the first things we do, right? Like when we do our site analysis, we quickly jump into a satellite view just to look at what is the site. And we always use that information in our business plans and presentations.
Yeah, and a lot of the information that you're going to see here are things that we grab from the site analysis, the market analysis, the pro forma, the schematics, all those things are gathered in this business plan.
Kind of giving more context, we start to look at, all right, like what are the neighboring buildings? Is there any things changing in the neighborhood? It's always nice to see if there's new development coming in the area. Obviously, you have to be balanced in terms of supply, right? We don't have oversupply of the product that we're building, but we do like to see that a neighborhood is improving. So we like to start to look at what's happening in the neighborhood, whether developments are going up and, what state that they're in. What do they look like, right? Nowadays, everybody who does projects tends to do rendering. So you can look up and, we're able to look up information like this and show how the neighborhood might look in the future and what those buildings actually look like. And then kind of plop it on a map and show it in relation to the project site.
Explain why investors want to see that. Like, why do they want to see that there's other projects happening in the neighborhood? Not just investors, but banks.
Yeah, I think banks are interested to see that probably for two reasons. One, I feel like it's a good sign that there's other things happening. So there are other developers willing to go into that market, do in our case, these are all new construction. This project is new construction. People are willing to go in and do projects that are similar to ours, and they've been able to achieve success through those projects. So in this picture and some of the earlier ones that showed the neighborhood, there are new buildings there. The second thing that is also good to know, and we go into the market analysis section, is just understanding what that projected pipeline looks like for supply. And understanding if there are buildings that are going to come online in the near future that might compete with this building, and if there's a chance that would cause issues for our project, and how does that supply relate to the demand that's in the market? So I think those are probably the two biggest reasons as to why it's important. But I feel like it's nice to see that the neighborhood is improving, right? New buildings. It just looks nice. You have new sidewalks, new landscaping. The streetscape is nice. And since these are all planned projects, the city is involved, a lot of thought goes into the neighborhood. How does this building and the other buildings all relate to each other, and what kind of pedestrian streetscape is created? So this street in particular has a lot going on it. And so we know it's going to change and it's going to look really nice when all these projects are completed. The other thing we like to make sure as we're diving into the physical aspects of our project, right? What is it going to look like? Is the building going to have good curb appeal? What are the materials? In our case, we had a building with a mixture of 3 different types of materials, and the architects can typically put a rendering together, right, for us to show how it fits on the street itself. It just, it kind of takes that 2-dimensional plan view, the drawings that we're going to see later, and turn it into a building that you can actually visualize. And so I find these are always easier to look at, whether it's for a lender or an investor, and for us to kind of give us a feel for what it's like to live in a building like this. And then the next couple of slides, we always like to show, what does the actual floor plan look like, right? So, we do this during the schematic phase of our projects, where we might do an initial analysis, and eventually we'll retain an architect and engineer to start to do the actual design, the actual initial site plans or zoning set. So this kind of gives the viewer, whether it's a lender or an investor, an idea of what the project is and how it looks. What does a studio look like? What does a 1-bedroom look like? What does a 2-bedroom look like? How big is the gym? It's kind of really getting into details. What is the parking? How is it set up? This building happens to have backyard. Kind of gives you an idea of what do these unit layouts look like? And for us, it helps us know okay, these unit layouts, how much will they rent for? What are some good features that are in here? Do we have walk-in closets? We have washers and dryers. Are they 2 bedrooms, 2 bathrooms? Are we able to fit a 2nd bathroom in a 2-bedroom? What kind of closets can we fit into here? Here we have bike storage too. So this is really getting more into the details. How big is the living room? We really start to get into those details when we're working with our architects. Oh, hey, make the kitchen a little bit bigger or smaller, or try to shift a wall around so you can, have a better setup for furniture. Hey, can you fit, all of our units in this particular building can fit queen size beds. There's ample space on both sides. So there's like things that you really start to get into like the layouts and fine tuning them with the architect, and then allowing us to showcase it here at least and communicate that information to everyone.
Yeah, for us, this is good because, we're thinking it through and it's helping us process the entire project. And, for investors and banks, it shows them that we thought it out, right? That we put a lot of thought into the design, into the livability of the project. And we're thinking about how it's going to get built. We're thinking about the market, how it's going to satisfy the market demand, if you will. So it just shows people, whoever's looking at it, that we've been thinking about the entire project thoroughly.
And then in our case, we also have a common area rooftop deck. And so this is meant to help people visualize, what that view might look like from that deck. How big the deck is, what are the features up there, how is it laid out. And so it's, these amenities these days, at least in our market, the amenities have become really important. And so communicating that information to lenders in particular like to see stuff like this too, because they know what certain lenders, they know the market and they know competing buildings. But this kind of gives a sense of, okay, yeah, it's a nice building. It looks like it would be attractive. It's going to have tenants. It's going to attract tenants that will want to live there and rent there, hopefully stay full, right?
Yeah, one thing I want to point out is that the drawings that you're seeing here, they're not specifically the ones that we're building at the end. So these were done earlier on. We took them out of the site plans. So it's okay to take the first drafts of what you're thinking about building and put it into your initial business plan and pitch it to your investors and your banks early on. You can just notate it somewhere in the document where you tell them that, these are just drafts for now, but you want to get these drawings in early on as possible. You don't want to wait until your construction drawings are done to develop an investment deck.
Yeah, these things are always evolving. I mean, even this presentation, we will periodically update it as information changes, just so we have, at least from our perspective, our thoughts and our business planner.
Yeah, as I'm
still updated.
As I'm looking at this, I'm looking at the deck, and it's now completely different from what we drew.
So yeah, the next section that we usually like to get into is a real estate market analysis. So, this is one of the phases, right, that we've talked about before, where you have like site analysis, you have a market analysis you have to do. In this section, we get into all the weeds and details. This is where we're doing our homework to understand, what are rents? What are all these assumptions that we're going to have to make to develop a projected financials, right? To do projections and run a pro forma. And this homework that we do, this research that we do, becomes the inputs into those projections. And so, I'll go through all the different things that we tend to look at. I always like to look at rents visually. It's just like a very nice way to kind of like explain a lot of information in just like one slide, especially for people that, like a lender, you could communicate some of this stuff in a bunch of Excel files and tables. I like to see it, okay, you're talking about a building or an address. It's nice to be able to see that, like let's say in a satellite view or a map view to kind of understand your building and how it relates to that physical context and the competing buildings that are there. So this slide basically does that and gives you a high level overview of rent ranges, right? So later on in this section, I get into more of the weeds and break down by unit types and everything, but this just very quickly shows you the other buildings that are there, what are the rents that they're charging, what's the rental range. Let's say $2,200 for a studio up to, say, $3,500 for a 2-bedroom apartment. What are those buildings? Where are they in relation to our project? Like a very quick, a quick visual view. And then all this data, when we're doing that research, we get it in a couple of different ways. In this presentation, this happens to be like CoStar data, but we'll go through all of our databases that we have access to, and brokers are really good at stuff like this and giving us information. So we'll start to, when we're doing that research, right? As part of our market analysis, we're trying to understand what are the potential rents that can be charged for the building that we're building. And we'll start to look at that market and understand, start to stratify that market into, you might have buildings that are very high end luxury. What are they charging? What are building, depending on what our business plan is, the business plan for this building, it's sitting kind of like in a mid-tier spot where it's a nice building, but it's not meant to be the highest end, highest rent building in the market. So then we start to think about, okay, of these buildings, which ones are probably going to be more directly comparable? What do their amenities look like? What are the features in the building? Do they offer washer dryers? How much rent are they getting? Are we noticing differences in rents because certain features are in the building? This is us just doing our homework, right? And kind of laying that out in this presentation to show all those buildings that are out there and what are the rents that they're charging. And same thing, it's just like laying out more information around each of those buildings that we were considering to be potentially directly comparable to us and what type of rents they're charging. I have found sometimes the data source, CoStar, can be a little off. So, usually when we're doing this, we'll cross-reference it with other sources and make sure that the information's accurate. In the end, all that research, we're constantly vetting that data to make sure it's accurate. And then we also look at, like I was mentioning earlier, we don't just look at, let's call it directly comparable buildings, ones that are truly in our data set. We'll look at the entire range of the market, not just mid-tier buildings. We'll look at higher end buildings that are in the market. We'll look at completely different markets because where our project's located, a big neighboring market is New York City. We like to look at what's happening in New York City and what are rents doing over there because we all compete with each other in a way. And all this information is, at least when we did the research, is readily available online. Pretty easy to put together. But again, it's all data that is meant to educate the viewer, right? So whether it's a lender that has been in this market before and perhaps knows it already or doesn't know it, irregardless, this information it's updated frequently. So we always want to know, like, what does the market look like right now? Even if a lender looked at it, did a product, let's say it did a loan on a project 2 years ago or a year ago, they might know the market, but things may have changed in a year or two. Rents may have gone up or whatever they might be. This is meant to be a current snapshot of what everything looks like, and just to educate that person when they're reading it. Lots of data, lots of numbers. So I feel like usually when I'm talking to someone about this, I tend to be pointing out certain things, right? Because there's obviously lots of data on these slides and lots of information in these things. But there are certain key things that are more important than others. That tends to be what I look at when we're doing the projected financials. Things like the actual monthly rent, how much is the rent per square foot, what are trends and where was it previously, where is it going? If we're noticing anything that's happening in the different markets that we're looking at, whether it's Manhattan, Brooklyn, other neighboring ones.
Yeah, and again, you want to just show your investors and your lenders that you're doing your homework.
Yeah.
And that the product that you're building is supported by the market.
And then in addition to doing, everything we looked at previously was all rent related. So those are like rental comps. The other thing that you have to make sure to include in these business plans is understanding that, hey, we're building something here, a building, and it's going to be worth something in the end. And there's a methodology around determining what is that building going to be worth. And so this is looking at comparable buildings, comparable valuations. So like, what are the market cap rates? It's a multifamily building. So how much are other buildings selling for per unit? If that data is available and out there. So there are research reports that you can pull. And so we usually like to present that information that we're doing, our research, to help support the case of when we do our pro forma and we look at it later, that the assumptions that are in the pro forma are justifiable and they can be supported with data and evidence. And so this is meant to be some of that data and evidence regarding what the building is worth at the end. So we'll do all kinds, we'll look at cap rates. We'll look at comparable building sales in the market. And in this case, it's multifamily, dollar per unit is a metric that is more easily available and verifiable. Cap rates are a little tougher. That's where we usually talk to brokers to get that type of information. And I kind of feel like a lot of this stuff so far is like stuff that even appraisers end up using this information. So like when we share this with lenders, eventually when we're engaging the lender and that lender retains an appraiser, usually the same information will give it to the appraiser. That's really important, I feel like, because it reduces some of the unknowns, because you don't want the appraiser to use comps that are bad, because even if the appraiser might have, let's say, direct market experience, or in a case where the person doesn't, you just want to make sure that they are educated and that their appraisal is accurate and ends up resulting in something that is, truly makes sense for this project. Because if the appraisal comes back bad, that can screw up your ability to borrow and how much you can borrow.
Just explain what that area that's blurred is. What's behind that? What's in that data?
Yeah, so this is literally just a list of buildings that are similar to this one that have sold in this market. This has been filtered, so we went through a process of like downloading all of the sales of apartment buildings, and then we went through and we said, okay, well, we're looking for comparable buildings, something recently constructed, obviously multifamily, located in this market, has a certain number of units, at least has a certain minimum price, and looking obviously like when it closed as well to understand, because market dynamics change over time. Looking at all that information and trying to get to a number that is a dollar per unit metric. So that dollar per unit can be used to help extrapolate what our building is worth when it's complete. So this table just happens to show 15 comparable building sales from 2019 onwards. The price, number of units, dollar per unit, when did it close, when was the building built, and which submarket is it in within the city. All these are in the same city, but then there are submarkets in the city, right? So as we know, the waterfront is a nicer area, tends to command higher prices. Things that are more transit-oriented command higher prices. So it gives you some context as to what the buildings are worth when they're complete. And all appraisals will usually have this type of data in it. So this is me doing some of the homework for the appraiser, but we really have to do this ourselves as well before we get into our projects. Then the other thing we also like to look at is the pipeline of the future. So in this market, CoStar is a good data source, but we like to look at what does the future look like in terms of projects that are going to be delivered, how many units are coming online, how many units have been delivered in the past in this particular area, and how did some of those new deliveries perform in terms of their lease up. So this is like data that's available that we usually like to look at just to understand, and also becomes part of our inputs into our pro forma. It's like one of the inputs in our pro forma is how long is it going to take to lease up? And is it going to take 3 months? Is it going to take 9 months? Some markets can take 9 months. This particular market currently is taking 3 to 5 months. So it becomes part of our inputs into our pro forma, and we just want to make sure there isn't necessarily an oversupply in the near future that could affect our ability to lease up the building or charge the rents that we want to charge. And then we also like to just do other kind of like economic type analysis, right? Like what does job growth look like? What does unemployment look like? This particular chart, jobs in general, I think are like one of the biggest, most important things. It's, at least in our area, it's a big driver. It's been an exceptionally big driver post-COVID for us in our area, because a lot of jobs, an extremely large amount of jobs came back right after COVID. And I think that has driven a lot of the demand. And so that data is just us checking to make sure we understand the context from the perspective of the economy and the market that we're in. And since ours is heavily influenced by New York City, we looked at the New York City jobs data just to understand what was going on. And this, I know when I pulled this data and I looked at it and I just saw how quickly it whipsawed after COVID, that really explained like why did post-COVID rents go up the way they did. And I think it really had to do with, a lot of it had to do with how quickly those jobs came back. And that's where the demand, everybody came back. It kind of, the streets are alive, right?
And there also was a little bit of a damper on the supply of units because of COVID.
Yeah.
How it had constraints in the construction market.
And then the other thing we also like to look at are land comps, right? So this is development project is ground up new construction. So there's land. One thing we like to understand is like, what is the land worth relative to the other sales that have occurred out there? In our market, there's been readily available trades of developable land, and you can look those up and you can kind of get a feel for what the what buyers are willing to pay for this land. And so you can look up the price, what was the closing date, the address, where is it located, how many units can you build on that land, how much gross square footage can you build on that land, so you can get to a metric to apply it to our site. This thing's worth $50,000 a unit, $60,000 a unit, or $75 as billable square foot, whatever that metric is, whatever the data is telling us. The idea is to do that homework and research and understand that underlying value of the as-is value of the land.
And why is that important to the investor or the bank?
So banks, it's important for the pro forma, and the banks is in the end, our ability to borrow is going to be determined partly by this value. So, things like loan to value. And when banks are sizing up their loan and they're giving us this funding, one of the things that they fund is land value. So they're not just funding your cost of construction, they may also be willing to fund some of your land. Because that's, for them, their perspective is it's a lien, it's a mortgage. So their security, their collateral is the land and the physical improvements that are on the land as you build them.
And what about for an investor? Like, why is that land value important? If those guys are coming in early before the bank is even lending.
Yeah, we're those people, right? We fund our projects, so we're one of those early investors. This helps us makes us feel comfortable that the investment that we're making is supported by an asset that can back up the cash and the investment that's going into the project. Mm-hmm. It just makes us feel comfortable knowing that, as we spend money on things, entitlements, approvals, construction drawings, soft costs, right? These things that are before any shovels laid in the ground, right? Like anything occurs, there's all these soft costs. And for us, we like to know that it's protected by that land. This is real estate, right? So we're heavily affected by interest rates, especially more recently. So this is something that we're always tracking. So when we're doing construction projects, our financing on that construction loan is determined by floating rates. Those floating rates are usually something like the Wall Street Journal prime rate or SOFR or LIBOR back in the day. So those are like rates that we tend to follow and like to understand context, right? So where are we? What did it look like in the past? Is it telling us something potentially about the future? Having that understanding is important because when we do our pro formas, these become important assumptions in the cost of capital. It's real estate. So we eventually, when we finish building this building, we're going to have a permanent mortgage. We'd like to understand when we get that mortgage, what's potentially the rate going to be on it. Obviously, we can talk to the banks and get an idea, but it's usually based on other rates. And so it's just nice to have that data and to know what it has looked like in the past and just give you some context and provide some supporting data for the assumptions that go in the pro forma around the rates.
And you can also use it to kind of predict where rates are going to go, because if you look at the past history, you can see that every time the rates are very high and they plateau for a little while, they tend to drop, right? So if you're looking at the very end where we are today, you can make the case to investors and banks, mostly to investors, that it's potentially going to drop, and therefore the numbers in the pro forma are going to change for our benefit.
Mm-hmm. That whole section is just kind of getting into real estate market analysis and some of it a little bit more like capital markets type information. Now we kind of get into the actual project financials. So the projections, the pro forma, the legal structure of a project. This section I feel like tends to be a little heavy in terms of information. It can get pretty technical. But the information in here is definitely very useful for lenders, like kind of speaks their language and the type of metrics they like to look for. But it's also meant to convey, very detailed information to investors so that they understand what they're getting into and the amount of thought and analysis that goes into it, all the assumptions that are being made.
And this is all the information that we pulled from our pro forma model.
That's right. So the first thing we usually like to explain lenders obviously care about this stuff, investors should too, is the actual legal structure of the project itself. So, our projects, there's a piece of land, there's a deed. That land is owned by an entity, typically a limited liability company. And then that LLC has its owners too. So depending on the project and the way we've structured our deals, this is meant to just convey like that legal organizational structure. Because for like, imagine you're a bank, you're a lender, you want to know like, hey, Ben and Kevin, you're the sponsor, you're the developer. Where do you fit in? Right? What do you own? How does that look like? How does it relate to the borrower entity, the entity that owns the property? And same thing from an investor. It's meant for them to understand, okay, I'm making a capital contribution to something. Where is it going? Who is it going to? What is the entity? Where is that entity domiciled? How does it all work? What does the ownership look like? And this usually explains it in a graphical way with an org chart. Everything is kind of blurred out here, but this whole section overall, it's meant to explain, that org structure and what that investment is. If the investor is coming in making a contribution, what does that contribution look like? Real estate in general, it's funded by combination of debt and equity. And so the debt side of it, we know typically might come from a bank or it may come from a private lender, or, depends on the sponsor and how we finance our deals. For us, typically banks. The equity side of it can be structured in a number of different ways. You can kind of slice it up in different ways. We have our own capital going into the deal, and then we have investors that we work with, right? And this section explains to them what the contribution that they're making, what they're getting. Not in terms of like dollar amounts, like profits or anything, but an explanation of what they own and what they, do they have any voting rights, any management rights? How are they involved? Are they completely passive? Are they active in any way? Are we promising them a certain return, a minimum return? Usually that type of stuff is what we explain here. And then at a high level, we also like to show and help them visualize that when they invest in a deal, how does the cash flows come back, right? And do you pay back the construction loan first, pay back the mortgage? Do you pay back the investors next? Like, how does that all work? And this is meant to be a section that kind of explains all that. And then we just start to get into the actual pro forma itself. So, there are a number of slides in here that are all related to outputs from our pro forma. We have a whole section, right, that we did where we talk about the pro forma and what's in it and all that information. I'm not going to get into it here, but really the purpose of this is just to kind of explain and show numerically and dollar amounts, everything related to your pro forma. How are we financing it? How much is the project going to cost? What are the assumptions around those costs? On the financing side, the debt, how much are you getting and what is the rate on it? All of that homework that we did previously and all the conversations that we've been having with our various lenders and people that were our consultants and everyone that we're working with, all of that information is starting to go into this pro forma.
Which particular sections of the pro forma did you have to insert into the investment deck?
So usually I will tend to focus on a couple of things. So sources and uses of cash. So this is, what is the project going to cost? So those are uses of cash. And where is the cash coming from to pay for those? So, that's construction loan, debt, equity. That's always in here. I usually also like to show on the debt side of it, what are some of the assumptions around the construction loan, the cost of that money, how it's being funded. Won't necessarily, at least, there's obviously tons of information behind here. It's lots of detail that goes behind these things, right? That's just the soft cost line item alone is probably like another several pages of information behind it. Usually I don't put it in here because I think it's too much, but if anybody ever asks us for it, and usually people do eventually, we provide that type of information, some of the assumptions behind it. But at a high level, it's just meant to be the sources and uses of cash and how it's being capitalized. And then we'll also go into assumptions around the rent, what's the unit mix, how much are we charging for each of the apartments, what do the expenses look like for the building, how much NOI is it generating, what is that NOI, what is the yield on this building in relation to the cost of the building, what are the assumptions around when the building is finished. We're going to either refinance the construction loan or we may potentially sell the building. So we always look at that, right? We talked about that in the pro forma. That information and around the waterfall and the repayment of the construction loan, the assumptions around that refinance, what does it look like in terms of dollar amounts? How much money could we potentially get? What interest rate do we assume to get to that assumption? All of that is meant to be communicated here and to give an explanation to a lender or an investor what that looks like in dollar amounts. We also look at a projection. We always have projections in our pro forma. This is same thing. This is just showing, okay, what does it look like over time? Does this building grow in value? How do the rents get projected? Does the NOI grow? How does the debt get paid down? How do these metrics change over time, over a projection period? Because the lender would like to know that usually, and so does an investor, because if we're a long-term owner, in this case, if we decide to keep the building, we want to know what that looks like, right? And it impacts our returns in the end anyway. So there's a projection that's shown. I also show that this was a projection around just the operations of the building. So revenue minus expenses, and then debt service, payment of the debt. That's a different set of cash flows. Those are like your operating cash flows for the building. Then there's also a projection that I show around all the cash flows. So this is during, you have construction phase, right? So a pre-development construction phase cash flows. What does that look like over time? Then there's a refinance event that occurs. Keep the building. What does it look like after you keep the building? What do those projections look like in terms of cash flows? That's all shown in here usually.
Essentially, you want to show how does the investor get their money back?
Yeah. How are they getting money back? And obviously we do this for profit. How much profit are they getting? Right. When is the money potentially coming back?
Where's their break even?
Yeah, but you could do all kinds of, there's break even analysis in here later. You can look at all this stuff to understand, when are things occurring? And since this is a projection, you can start to do things like an IRR, internal rate of return, do an analysis and show what is my annualized return on these set of cash flows. We're putting capital in. How much capital are we getting back and over what time frame? And what does that return look like? Those are all usually shown in here. And then we'll also show, depending on how we structure the capital, what does the return look like for that capital? Maybe we have preferred equity. Maybe we have mezz debt. Maybe we have some kind of profit participation thing, some kind of common equity. It just depends on each deal. And we'll show what that return looks like for everybody. And also for ourselves, right? Our own capital and the profit that the developer can potentially make. And then we'll show stuff like, okay, if you're, most of our deals, we tend to have more than one investor. It's not just one person that comes in and provides all the capital. It's multiple people. It's our capital. It's other investor capital. We like to show, okay, if you hypothetically invested this much, what does it look like for that amount of capital?
So what would be a good example? How much?
Like, okay, let's say you invest $100,000, and if you invested $100,000, how much do you own of the project or of the entity, the real estate? What percentage do you own? And how does your the cash flows and distributions come back to you, and the profits? So this kind of shows you at a more easily way to understand, let's say. Mm-hmm. Because sometimes when you're looking at this stuff, like these aggregate numbers, I don't think it's easy to understand if you're just like one person who puts in a small amount. What does it look like? So yeah, we have lots of information and data, and there's lots of stuff that's in our pro formas that we can show. We've kind of whittled it down to just this. And then the other two things that usually we like to end with are looking at like downside and upside cases. And we like to convey that to people because we know these are projects, there's risks involved. And this is meant to convey the message in a downside case, like, oh, what if we go over budget and the hard cost is too high? Or what happens if the interest rates go up? Or, what happens if cap rates change or the market rent we're charging, we're not able to achieve it? what are some downside things and what happens to the returns, what happens to profit, are there losses in any of these things. This is meant to capture that in a slide and show numerically, like, look, here's where potentially you might have a break even, here's where you might potentially have a loss, and explain that risk, I feel like, in a numerical way.
It's almost like frequently asked questions, right? These are things that investors or banks will ask.
Yeah, banks, they have credit committees, and so that's the credit committee's job. They come in, they start to sensitize, they start to say, oh, yeah, interest rates are 6% right now. Mm-hmm. What happens if it's 7? What happens if it's 7.5? Yeah. Or they do like vacancy trusses. Yeah, you're telling me it's 5%. What happens if it's 10? What happens if it's 15? They start to stress the building to understand what the implications are for them and their loan. And much the same that we do this to understand not only the impact on the lender, but obviously we're in a more junior position, so we're taking a higher risk. What's the impact to us as a developer and our capital? And then you can't always end it on a negative note, right? You got to look at the upside. We also like to, although it's blurred out here, but we usually will show and sensitize things like what happens in an upside case. What happens if the building's worth more in the end? What happens if the rents are higher than we expect? If we have a good market, what happens if the interest rates go down more than we expect, or the cost of the financing ended up being less during the construction loan phase? So this is meant to convey that type of information. And I think it's always good to look at that because we tend to be conservative. We want to make sure we have an underwriting that is reasonable. But then there's always a chance that good things can happen. And it's good to understand like what that could be. What does that potential mean? I feel like the other really big thing is who is the sponsor, right? So lenders care about this. Investors obviously should, but lenders always do. They want to know like who is that person that's going to be borrowing $20 million from me and they're going to be running this thing. They better know what they're doing. So as much as this pretty presentation tries to convey that in detail, we also have a presentation, right, that gives people background on who we are and the company. In our company overview, we have a couple of different things in it, right? So we like to give people an idea of our story and give people a background as to where we came from, right? So you have a unique story that is more hands-on, or you had a construction background back in the day. So give a very quick synopsis on our background and where we came from, so people understand who is the company, where did it come from, and the people that are behind it. And then we also like to talk about why real estate. There are a number of reasons why we like to invest in real estate. Without getting into the specifics here, but just really quick ideas behind why real estate's a good place to invest. Some of the reasons why we like to invest in it and why it's good for us as developers as well as our investors. And then we also get into a little bit about like our expertise. We obviously have a long history and experience that we've developed. We like to pitch that and let people know what some of that stuff is, like track record. You have a very long background in doing this, right? Having done this for 20 plus years, having built really nice buildings over that time frame. So these are just meant to be like quick little snapshots as to our experience, our expertise, and the capabilities they have, and why we're good at what we do. What we bring to the table. Right. And then just, very quickly explain to people our thought process and what we do when we do real estate development. A lot of what you saw, right, in that business plan, these are the steps that we take, right? We do market research, we check the demographics, do the location. We have a whole process around our planning and the city and who we work with, and then how we manage the projects when we're actually under construction and work on marketing at the end. This section of the presentation is just meant to give people that idea of like all these different things that we do and the way we think about our projects. All of our developments usually follow a certain set of phases or steps, and kind of the steps that we take at the various phases of the projects that we manage. And just give people that idea that we, the purpose of the deck is to let people know who we are and what we're capable of and how we do it. And then another section that we have is just around services, right? Because we not only do development ourselves, we have certain experience, we help others and advise others on things related to the real estate development process and around the capital and how to structure these deals and construction. And then I think the other thing that I personally think is really important, because up until now I feel like it's just like company level, right, information. It's good to always include some amount of like management bio, because I feel like if you come across a company and like the name, this is building up, right? Me personally, I always like to know, all right, great, company looks good. It seems like you know what you're doing, but like, who are the actual people? Because obviously it's run by people who are the senior management, the key decision makers. And I think you have to have something about who those people are. In our presentation, we have information about me, information about you, and words you have, the experience you have, how many years you've worked in it, kind of what you bring to the table, your expertise, what expertise I have, the finance background and stuff. So this section, at least for us, is to explain to people who we are, the role that we have within the company, and our background specifically. And then I think this section is obviously very important. So for us, you have a very long history, right, of having done this in this area for 20 plus years. And I only met you like 12 years ago. Explaining to people projects that you've worked on in the past, because that is a direct correlation with your expertise. And since we're dealing with real estate, it's great to be able to like point out addresses, buildings, what those projects were they ground-up new construction, were they existing buildings, existing renovations, how big were those projects, how many units did they have? That I feel like gives you like a very direct examples of your capabilities and expertise, because that's your resume, right? Like what you've been working on. And in our case, there's like a bit of a clear story as to starting with existing buildings to growing to more complicated new construction to doing a larger commercial, multifamily type projects. So this gives lenders, investors an idea behind the history of the company and the people behind it.
Yeah, and I think for other people who are looking to get into large projects and they're wondering whether or not they should include the smaller projects that they've done, I think the answer is yes. I think it's good to show the investors and the banks that you have that long history, that you've, kind of cut your teeth in smaller projects in the beginning, and they see that growth and that you've been consistent and you've, stuck to your passion throughout the years.
Yeah, everything is all that experience are things that you've learned along the way.
Correct.
And so that is, at least in this field, very helpful.
Yeah, and even if they're very small, there are some small projects that, although they're small, they could have been challenging, right? Like some of the historic buildings. Mm-hmm. And we included those because they are historic, and everyone knows that those types of buildings are very challenging. So if you could restore some historic buildings, there's a theater in there that we renovated. That was extremely challenging. So if you do stuff like that, that means that you can also do larger projects.
Yeah, I feel like all these things they have their own challenges and troubles. And so if you're able to get through these things, it speaks to what you're capable of, regardless of that size. So
exactly. And some of the smaller projects, it's funny because they almost take just as much time as the larger projects. So it almost doesn't matter, right? It's just a matter of numbers, right? It's just a bigger scale.
Yeah.
That's it.
I think most people that do this in real estate, whether it's development, investment, whatever it is, or in real estate, so it's always nice to see where everything sits on a map.
Yeah.
It just gives you context. We're hyper-focused. So we have very direct experience in the city in which we operate. But then there are guys, obviously, that do stuff nationally, multiple markets, different states, different cities, just to kind of give an idea of where these projects sit in relation to each other and size. It just provides more context and the experience that we have. So I think it's always good showing projects that you've worked on a map. It's just helpful to give that context. And then in our case, it's always good to look at how things are growing. So
yeah. And a slide like this, I like it because when you're showing it to investors or even a bank, it's kind of depicting the excitement of the growth, right? And they want to be part of it. So it's like, there's that hockey stick just showing like how quickly we're growing, and they want to be part of it early so that they can get to the next stage, right? So hopefully you have that growth and you show it. That's it. Now you've seen the full investment deck we use to raise capital. And with that, you've made it through the entire 5-part feasibility series. If you watched all 5 videos, you now have a clear blueprint on how to evaluate a development site, study the market, create a vision, run numbers, and present your project in a way that builds trust and raises money. But this is just the beginning. On this channel, we won't just sit in the office all day, we'll take you onto the field. So if you want to see how we bring these projects to life, check out our on-site videos where we walk the construction job site, share real-world lessons, and show you how deals actually get built and sold. If you found this series helpful, make sure to like this video, subscribe to the channel, and turn on notifications so you don't miss what's coming next. We've got more content on real estate development, so stick around.